This MACD variant strategy I'm about to show you is so profitable that it was actually the most accurate strategy that I came across this entire year. And when I say MACD variant, it basically means that this strategy doesn't use the traditional MACD indicator. Instead, it uses a newer and improved version of the MACD called standardized MACD. Let's dive right in because I'm going to show you all the indicators used in this strategy as well as the entry and exit conditions. Let's get into it. Now, let's begin by adding the main indicator of this strategy. As mentioned earlier, it's called standardized MACD. To add it to your chart, you're gonna go to TradingView, then load any trading security that you like in any time frame. For me, I'm gonna be using the 15-minute time frame of GBP USD. Then click on Indicators, type in standardized MACD. Select this one called Standardized MACD Heiken-Ashi Transformed, created by Quantilux. The standardized MACD is an advanced indicator designed to overcome the limitations of the traditional MACD indicator. It offers a more robust and standardized measure of market momentum, making it comparable across different timeframes and trading securities. By incorporating the Heiken-Ashi candles, the standardized MACD provides a smoother visualization of trends and potential market reversals, enhancing its usability for traders. Now let's go over its key features and functionalities. This upper red level is called the overbought level. This lower blue level is the oversold level. Now, just like the traditional MACD indicator, the standardized MACD also contains the MACD line and the signal line. This white line traversing the indicator window is the signal line. And these Heiken-Ashi candles represent the MACD line. The crossovers between the MACD line and the signal line are going to be used as buy and sell entry points. When the MACD line, these Heiken-Ashi candles, crosses above the signal line, that indicates a potential entry point for long positions. On the other hand, whenever the Heiken-Ashi candles cross below the signal line, that indicates a potential entry point for short positions. Then this is the MACD histogram, and this white horizontal line is called the midline. When the MACD histogram is above the midline, that indicates a bullish market momentum. On the other hand, whenever the MACD histogram is below the midline, that indicates a bearish market momentum. Now, what about these blue and red arrows? Well, the red downward arrow is going to be printed when the market is overbought. This basically happens whenever the MACD line enters into the upper horizontal level. Conversely, the blue upward arrows indicate oversold market conditions, and they're going to be printed whenever the MACD line goes into the bottom horizontal level. Now let's add the traditional MACD indicator to the chart so we can compare the two. Now, as we can see, the difference between these two indicators only comes from these two horizontal levels, the Heiken-Ashi candles used in place of the MACD line, and these up and down arrows. But for the rest of the features, these two indicators are pretty similar. The use of Heiken-Ashi candles in place of the traditional MACD line provides a smoother visualization of trends and potential reversal points, enhancing this indicator's usability for traders. Now, as opposed to the traditional MACD, the standardized MACD also includes horizontal levels at the 100 mark and the minus 100 mark to serve as the upper and lower extremities for this indicator's analysis. This basically gives the standardized MACD the ability to be used to identify overbought and oversold conditions in the market. As you can see, right here when the MACD line entered into the overbought level, a red downward arrow was printed, indicating a potential entry point for a short position, something that wouldn't have been available on the traditional MACD. And then here, the market pushed the MACD line into the oversold level, and then a blue upward arrow was printed, indicating a potential entry point for long position. If you were to enter a long position here, that trade would have been profitable. Next, we're going to access the settings of this indicator so we can customize it to our strategy. But before that, let's talk about hankotrade. hankotrade is one of the most reliable forex brokers out there. For that reason, I use them every single day. As you can see here, this is my live account on ActTrader. Yes, hankotrade are now using ActTrader instead of MT4 or MT5. they have some of the lowest commissions and spreads in the industry, with spreads literally going as low as 0 pips. And if that's not enough, they're also going to give you a 100% bonus for all your first deposits up to $25,000. So if you deposit, say, $500, they're going to give you a bonus of $500. So in total, you'll have $1,000 to trade with. To access the bonus, as well as all the other perks, sign up to hankotrade using the link in the video description. Now, back to the video. Now, double-click on the standardized MACD indicator, then inside the Inputs tab, we're gonna go under the UI options, then change the bar coloring to signal line crossovers, which is this option right here. This is basically gonna color the bars based on the crossovers between the signal line and the MACD line. Then for the display mode, we're gonna select the MACD option. This is basically gonna hide the MACD histogram, and the reason for this is because we're not gonna be needing it for our strategy. After that, click OK. Now, to finalize our setup for this strategy, we're gonna add 2 more indicators to the chart. Open the Indicators tab and type in EMA TrendCloud. Select this one by R. Westbrook Jr. Next, type in Support and Resistance with Breaks. Select this one by Han-Getty. Double-click on the EMA TrendCloud, then on the Inputs tab, change the slow EMA length to 200. For the fast EMA length, we're gonna keep it at 50. After that, click OK. For the break and retest indicator, we're gonna stick with the default settings. Now, how we're going to combine these 3 indicators is that the standardized MACD is going to be giving us the buy and sell entry signals based on the crossovers between the signal line and the Heiken-Ashi candles. The EMA trend cloud is going to be used to identify bullish and bearish trends in the market, and also to ensure that we're only going to be trading in the direction of market trend. Then finally, the break and retest indicator is going to be used for that, to identify breaks and retests in the market. Now, without wasting any more time, let's go over the conditions for entering trades using this strategy. To enter a long position, first, we need the Heiken-Ashi candles to cross above the MACD signal line, and that crossover needs to happen below the midline, like it did right here. If you're not sure whether the crossover has happened, you can just look at the candles. Whenever the candles change color from red to blue, that indicates a MACD crossover. Now, during the MACD crossover, the market should be in a bullish trend. To confirm that, we're going to be using the EMA Trend Cloud indicator. We need this trend cloud to be colored green at the time of the MACD crossover. Condition number 3 is that we need the price to do a break and retest of the most recent resistance level. The resistance level is going to be identified by the break and retest indicator as this dotted horizontal level right here. To see this indicator in action, let's just let the market play out. As you can see, the indicator has labeled this candle as break, which means a break above the resistance level just happened. Now, we just wait for a retest. And here, the indicator has labeled this candle as retest. The labeling for the retest is delayed by 1 candle, which means this is going to be our entry candle. Now, the last condition, which is actually the most important, you may want to pay attention to this, is that from the moment the MACD crossover happens all the way to the entry candle, so basically from here to here, we need the candles to have only 1 color, and that is blue. If any of these candles happen to change their color to red, well, the entry becomes invalid. In this particular trade example, we can see that the candles maintained their blue color, beginning from the MACD crossover all the way to the entry candle. So this entry is valid. Because of that, we're gonna enter a long position. Now, to set the stop loss, we're gonna identify the retest candle, and then we're gonna place the stop loss just a few pips below the retest candle. For the take profit, we're gonna go with 2 times the risk, letting this trade run, and as you can see, it hits take profit. Now, to enter a short position, we're gonna do the opposite of everything we did here. Let me show you. First, we need the MACD Heiken-Ashi candles to cross below the MACD signal line, and that crossover needs to happen above the midline. If you're not sure whether the crossover has happened, you can just look at the candles. Whenever the candles change color from blue to red, that indicates a MACD crossover. Now, during the MACD crossover, the market should be in a bearish trend. To confirm that, we're going to be using the EMA Trend Cloud indicator. We need this trend cloud to be colored red at the time of the MACD crossover. Condition number 3 is that we need the price to do a break and retest of the most recent support level. The support level is going to be identified by the break and retest indicator as this dotted horizontal level right here. To see this indicator in action, let's just let the market play out. As you can see, the indicator has labeled this candle as break, which means a break below the support level just happened. Now we just wait for a retest. And here, the indicator has labeled this candle as retest. Just like with the long position, the labeling for the retest is delayed by one candle, which means this is going to be our entry candle instead of this one. Now, the last condition, which is actually the most important, is that from the moment the MACD crossover happens all the way to the entry candle, so basically from here to here, we need all the candles to only have one color, and that is red. If any of these candles happen to change color to blue, that entry becomes invalid. In this particular trade example, we can see that the candles maintained the red color beginning from the MACD crossover all the way to the entry candle. So this is a valid entry. Because of that, we're going to enter a short position. Now, to set the stop loss, we're going to identify the retest candle, and we're going to place the stop loss just a few pips above the retest candle. For the take profit, we could go with 2 times the risk, letting this trade run, and as you can see, it decides to hit take profit. In summary, the standardized MACD enhances the traditional MACD by offering a more standardized and smoother visualization of market momentum and trend. Its integration of the Heiken-Ashi candles makes it a robust tool for traders who need a clearer and more objective view of market dynamics, especially when dealing with different assets and timeframes. Now, remember, the strategy showcased in this video isn't financial advice. Do your own backtesting and forward testing before trading with your real money. That's been it for this video. I hope you found some value. If you did, hit the like button below and consider subscribing to stay tuned. Thanks for watching. See you next time.